Hello and welcome to another update video about Natgas. The Natgas chart is pushing a little bit higher into the resistance area that we defined already a few weeks ago. So it is still, in my opinion, only a three-wave rally from the recent lows here to the upside. We have an ABC structure in the white count, which still allows for one more low. The only thing is that we've had a break out of this descending price channel. So you could interpret that as bullish. We obviously had a break above this trend line as well as this trend line, then rallied into resistance. And essentially the price isn't doing anything that would be unusual in this case. Okay, so we have not even broken above resistance, not above Fibonacci resistance. Okay, but we're now at a point where I'm definitely on the watch for a potential reversal to the downside, for a fifth wave to the downside. I cannot confirm that until certain levels are broken. So in the short term, the price still has the potential to push higher. And we're going to take a look at that in this video. In the previous videos as well, I shared with you what needs to happen for me to confirm eventually that we've actually bottomed in a larger degree wave 2. So the idea is, okay, did the overall wave 2 bottom here? That was in February this year. Or do we get another low? And at the moment, the short-term trend is up, especially against this April low. Okay, so that's, I think, clear. Printing higher highs, higher lows. But it's still happening overall in a three-wave corrective structure. I highlighted to you in the last videos that if you want to trade this for higher, the key level to use is the swing low from the 1st of May. And that's also the level that, if broken, would confirm to me, at least with, let's say not confirm, but indicate that the fifth wave to the downside has started. And that level hasn't changed. It's at $1.91. Really would like to get that level. Well, I need to see that level broken, right, to confirm that we're heading further to the downside. Below that level, it's likely this swing low area that's going to be tested around $1.59. For me, I'm still slightly leaning towards one more low. Obviously, this is getting quite protracted for a fourth wave. And ideally, I would have liked it to see turn down at the 50% fib level at 227. I mean, we are below that level, but it pushed slightly above it. I highlighted to you also in the last video that if we get to the 1.38 extension of this initial rally, which happened between the 15th of February and the 5th of March, that we can consider this as the third wave in yellow. So basically what, if you don't understand much about Elliott wave, no problem, but it's important to understand that as soon as a third wave or as soon as a rally gets to the 1.38 extension of, let's say, the initial rally, okay, so if that leg gets up to the 138 point extension of this rally, then it indicates that it could be part of a more bullish structure. Okay, typically whenever we get there, I start to consider it as a more bullish structure. And that means the probabilities for the yellow count have slightly increased, but we need the 5 waves up, okay? The 5 waves up will be our signal that with a high likelihood, a lasting low was put in place here in February. The advantage of that is if we get the 5 waves, then this would be typically followed by an ABC corrective pullback. As soon as we get 5 waves, we can say that with a high likelihood, a higher low should form in the pullback. At the moment, the parameters are being respected. The price rallied into the target and resistance area, touched 234 exactly, and is now reacting to the downside. At least we have a small reaction. Now, what I can do now is we can add a support zone to the chart for the fourth wave. Because the only way for me how this would work from a bullish point of view is as a diagonal pattern. And because this initial rally was a 3-wave move, so I can't trust it really until it's a complete 5-wave move. And we can add now the fourth wave support zone for a fourth wave in a diagonal. So as you can see, this slightly goes below the red line actually. So we need to talk about a sustained break, okay? So it takes a sustained break below the orange box to indicate that something more bearish is going on. Until then, we could talk about this as a fourth wave in a diagonal. That's just the situation because we've reached the 1.38. I highlighted in the last video that as soon as we get there, I can give you a new support area. That's what I'm doing. This is not high confidence, and I would not call that really a reliable trade setup. I would not rely on a fifth wave here. But it is the area that if we get a pullback from here, which isn't even confirmed, this is the area where ideally a fourth wave should reverse. At least we shouldn't see a break below $1.84. Even in a diagonal fourth wave, we shouldn't actually break below the 50% fib level, but sometimes they do. So that's the yellow count is still on the table. White count as well, and the $1.83, $1.84 level is the pivot between the two. I think we can keep it as that, and then I would actually like to shift that here to the downside as well. Okay, so that's the red line, that's the key, the line in the sand for me, okay? While that would not invalidate the idea of the yellow count, but it would be very unlikely then, okay? So it's all about probabilities. And the next clear signal that, something's... let's say the next clear signal would be a nice 5-wave move. And if we get the 5 waves completed, then we can add the next reliable support zone. And at the moment, I'm watching for a reaction here in the resistance area. I don't see anything super reliable about this chart at the moment, especially after the rally now. I think it's time to see if a pullback allows us to hold a higher low. And then, if there is a reaction here, the 5th wave could send it higher, probably into the 250, 260 region. But I first need to see now a micro pullback in this wave 4, and it takes minimally a break below the last swing low at 215 to indicate that this 4th wave pullback has started. So overall, not really any changed situation from previous updates. What I've done is to add a micro support zone to the chart that can be watched in case we get a pullback from here, and it's between $1.84 and $2. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.